Hello everyone, welcome back to the Audit and Attestation class. In this class, we'll be getting an understanding on professional skepticism. So let's dive into for more detailed understanding of professional skepticism.
Okay, so let's jump into the new topic. But just quickly take a look back here, what we have covered so far, so that you should not feel lost. So we covered on Government Accountability Office, right? The independence rules and the threat to the independence, right? Then we discuss about Department of Labor laws. So these are the 6 laws which are being relevant for the CPA examination and practice purpose, right? Now coming to the professional skepticism and professional judgment. So this also we have covered in the definition section, like at a very high level. So but here we'll be covering with the applicability of the professional skepticism and professional judgment. So what is professional skepticism? What is professional skepticism?
Questioning mindset.
It's a question of a mindset, like
What else comes in the professional skepticism?
सर एकदम ना ऐसे सामने दिखता है ना तो ऐसे बोलने में लगता है कि अभी ऐसा लगेगा लोगों को देख के बोल रहा है
कोई नहीं बोल दो, थोड़ा एक्सप्लेनेटरी वे में बोल दो ना तो लगे ना
बात को घुमा रहे हैं
नहीं, एक्चुअली क्या होता है, why I ask this question, क्योंकि जब हम खुद बोलते हैं ना, it retain in our minds.
राइट,
बिकॉज़ अब हम लोगों ने लिखना तो छोड़ दिया है कम से कम पढ़ तो ले साथ में, right? So what is professional skepticism? So what all comes in professional skepticism and why?
Sir, in an audit, there is always a risk of fraud, whether it is intentional or non-intentional. So it is a duty of the auditor to have an attitude of questioning mind to reduce the risk to the extent possible which occurred due to fraud or error, which is material.
Okay, so it has nothing to do with reduce the risk. First thing, yes, the questioning mind, you need to keep yourself alert to the condition, you need to keep your eyes and ears open, so you need to have like questioning mind, and you should be performing like all the procedure relating to your audit with the due professional care and with the standard of the due professional care, right? And then you also will be doing the critical assessment of the audit evidence which you have attained when you are conducting the audit, right? This all comes under the umbrella of professional skepticism. That means you need to be alert to the condition, right? As in when you are going through the audit in respective phase of audit, as a planning time, inquiry time, understanding time, when you're performing the walkthrough, when you are doing a test of control, when you are performing analytical procedure, when you are performing test of detail, or when you are doing like conclusion of your audit. Throughout the journey, you need to keep yourself alert to the condition which may result into the risk of material misstatement. But the professional skepticism just help you in identifying the risk of material misstatement or fraud, but they will not they are not the safeguard to reduce the risk, right? For that, you need to first identify the risk, and then you need to apply appropriate safeguard by additional audit procedure, or by discussing with the management, or by recommending to the management as the need basis, at the situation basis, right? So professional skepticism include due professional care standard, which you need to apply, questioning mind, alert to the conditions, and the critical assessment of the audit evidence which you have obtained from the management. What is critical assessment of evidence which you have obtained from the management? Let's say in the management, the customer balance is, let's say, $1 million, and you have sent the confirmation to the customer and they have confirmed you $900,000, right? So what do you do now? On what do you believe? Do you believe in the customer confirmation which you have received, or would you believe in the amount presented in the journal ledgers or a sub ledger as a customer balance?
We need to check all the invoices and all those, the bills which have been raised for that particular customer, so that we can actually, reach a conclusion as to whether the amount which was mentioned by the management is correct, or what the customer is confirming the balance, is that correct or not? Because we need to dig deep down into that to, actually assess the evidence.
Yeah, so that is actually a critical assessment of the evidence which you have obtained, right? For example, let's say management, for any legal matter, management is saying no provision is required, right? And then you have sent the confirmation and asked the management lawyer to provide you details and their independent assessment on that respective litigation matter. So when you got the confirmation from the lawyer, and from that confirmation, it has mentioned that company may end up paying, let's say, $100,000, right? In that case of scenario, would you go with management assessment, or will you go with the lawyer recommendation? Sandeep, Gurmehar, Vineet, are you guys with me?
Sir, could you please repeat it?
So for example, let's say I'm doing an audit of let's say Ericsson. Ericsson company. I'm doing an audit of Ericsson company. So there is some litigation going on against the Ericsson company. Let's say any supplier has raised any issue against the company, and he went into a litigation and he sued the company, right? At the year end, when I am doing the audit, I have checked with the management, and management says these all are routine matter. No provision is required for any such litigation. Then I send the confirmation to the lawyer who is assessing, who is supporting in this case to the Ericsson company, right? And the lawyer has given a confirmation to me with his best assessment that minimum loss to the company could be $100,000 and maximum could be $200,000. So that means at least the management would be end up paying $100,000. That is the lawyer's best judgment, right? So would you agree with the lawyer assessment, or would you be comfortable with what management is saying, that no provision is required? How do you assess this confirmation?
To my knowledge, sir, generally this can be a case of an expertise field. For example, if the auditor has expertise in this, he will assess the management confirmation and he will take his own judgment. Or else, if he has no expertise in this, he will depend on the lawyer and he will take appropriate action.
Yeah, so very, very good, Sandeep. In this situation, this is purely a legal matter, like civil law matter, right? Because like supplier has raised any, you can say, suit against the company. So as a CPA, we are experts in accounting and audit matter, but we are not experts in civil law, right? Or a corporate law matter.
Yes,
in that
sir,
case,
yes, sir, in that, yes. So, sir, in that particular scenario, I think we will have to agree to the terms what the advocate has given to us.
And then we will be challenging the management that the lawyer who is assisting you in this particular matter, they are saying minimum $100,000 and maximum $200,000 is a possible outcome of this litigation. Then why you are saying zero? Right, that is called critical assessment of the audit evidence.
Or we can take the help of our own expert as well if
you
we
have,
don't trust.
yes,
Yeah,
if you have lawyer in your team, you can take internal assessment as well.
As well. Generally, what does the firm do? Does it take
generally CPA firm, generally like small size or mid size CPA firm, they do not have like legal expertise, so they rely on the lawyer, independent lawyer appointed by the management.
Okay.
And I think, sir, that's the whole purpose of sending out the confirmation as well, right?
Yes.
Because we want to understand from the legal firm what do they anticipate rather than what the management or what we feel.
Absolutely. Right. So this is about professional skepticism we discussed. Now let's understand in which situation and why we need to apply professional skepticism. First is audit procedures. So when there are certain audit procedures where you need to give additional care and you need to be more alert to the condition and situation and the evidence you are obtaining and assessing those evidence. What are those audit procedures? One, where inconsistency you have noticed, right? For example, as per standard operating procedure, something is written X, but actually management is doing Y. So there is an inconsistency in design and the operation, right? So in that case of scenario, you need to apply additional professional skepticism, right? Wherever you have doubt about the reliability of the confirmation or the inquiry which you have received from the management. So where you are not comfortable with like what management is sharing the information with you, right? For example, sales and incentive program, let's say. So you went to the CEO and you discuss about like sales and incentive plans of the organization, because like the sales and incentive, as the sales is increasing, their incentive will be increased, right? And it will give ESOPs to the CEO and it will give additional bonus to the CEO. So the CEO might be in a biased position, right? They will be probably not giving the actual picture of the sales, right? In that case of scenario, you might not be confident about what like CEO is saying is absolutely right or not. In that case of scenario, you'll be looking at other evidence and then you corroborate those evidence from the different checkpoints. So you might be discussing, you might be doing those inquiry with the sales team, you might be doing the inquiry with the marketing team, right? You might be doing the inquiry with the accounting team, and then you'll be looking at the policies of the sales and incentive, and you'll be looking at the actual dispatches of the sales. So you'll be corroborating from the different source the evidence which management is saying or the CEO is saying is right or wrong. If it is right, then it is fine. If it is wrong, then you'll be challenging to the management, right? Next is testing of journal entries and adjustment journal entry. What is journal entry? You all are commerce student. What is journal entry?
Recording of transactions in the books of account.
Yes, recording of transaction in the books of accounts. So what kind of journal ledgers we have? What kind of ledgers we have generally in any accounting system? Have you heard about cash ledger, sales ledger, purchase ledger?
Yes, sir.
Journals, ledgers
Journal
can be
ledger?
for every expense item on the P&L, there would be a ledger almost. And for sales, there would be a different set of, for other incomes, there would be a separate set of ledgers. And
Yes.
further for tax, we will have different payable ledgers, income tax payable or GST payable, whatever it can be.
Yes.
So we'll have basically all the P&L items would be, and balance sheet items would be covered through some or the other ledger.
Yes, absolutely true. So for every transaction, you may have like journal entries in your books of accounts, right? So there might be some transaction relating to the cash, some transaction which are non-cash transaction, right? So those non-cash transactions which are not impacting your bank balance and cash balance, there might be a possibility that management do some manipulation. Or have you heard about adjustment journal entries?
Yes.
What is that?
Like in case of manufacturing companies, there are stock adjustment entries which management does at the end of the year.
Yes.
Those kind of entries are adjustment entries.
Yes.
Or maybe provision entries also, I don't know. They are also adjustment entries which we put at the year end.
Yeah. So for example, like provision for doubtful debt, provision for obsolete
Right.
inventory, leave encashment provision, gratuity provision, employee benefit provision. These all are manual adjustment journal entries, right? For example, if you have done an acquisition, so for acquisition also you'll be passing a manual journal entries, right? So those all transactions which are generally a manual adjustment or manual journal entries are more prone to the risk because like manual interference is being involved in this, right? So when you are testing those manual journal entry, you need to apply more professional skepticism, right? Next is accounting estimate. So when you are conducting the audit of accounting estimate, like for example, warranty provision, for example, sales and incentive provision, for example, provision for doubtful debt, leave encashment, employee benefit provision, right? So these all required a lot of management judgments, right? So wherever management judgment is being involved, human interference is involved, right? So there might be a possibility of the management biasness to impact their result. For example, they will try to, when you are creating a provision, what you are debiting? Expense, and you are crediting provision, right? That's what the journal entry you make. That means
Right.
increasing the provision, that means you are reducing your profitability. If management is inclined toward increasing the profitability, in that case of scenario, they will try to reduce the provisions. They will try to reduce the expenditure. If the management is more inclined toward reducing the profitability of the company, then in that case of scenario, they will try to inflate the provision, right? So when you are testing the accounting estimates, those accounting estimates are the management judgment. So you need to apply more professional skepticism to test those judgments and biasness considered by the management in calculation of those respective provisions. Make sense? Next is
Yes.
significant unusual transaction. So for example, any merger has happened, any acquisition has happened, any disinvestment has happened, any you can say operation you are discontinuing. So those all are unusual transaction. These are not our normal business operation transaction, right? So in those specific, or you can say unusual transaction, whenever you are testing, whenever you are auditing, you need to apply more professional skepticism. That means you need to ask more and more questions to understand more and more in detail, ask for more and more evidence to corroborate those respective evidence to provide a reasonable assurance, right? And the last one is going concern. Do you know what is going concern?
Yes, sir.
Yes, sir.
What is that?
Going concern is the ability of the company to keep doing the business in future without any significant event which might affect the going concern, as if the company or business will not be able to continue in future. That
So
is going.
the company will continue to operate in the foreseeable future, which is 12 months.
Yes.
So
Yeah. So important thing is next 12 months from the report release date. That is also very important, right?
Yeah.
So when you are assessing the going concern, then also you need to apply the professional skepticism, right? So these are few audit procedures in which you mandatorily need to apply more professional skepticism. So professional skepticism will be applied throughout the audit, but these are certain areas which require more attention of the auditor. Second is audit area. So there are, like, as of now in first column we discuss about audit procedures. Now we are discussing about audit areas which require more professional skepticism. One is when you are evaluating uncorrected misstatement. So you are extrapolating that and understanding whether the extrapolated amount is material to the financial statement or not, and accordingly you will be giving the opinion on those financial statement. So when you are assessing or evaluating the uncorrected misstatement, it is very, very important for you to apply additional due care, apply more professional skepticism, right? And that whether it's individually or in combination, considering both qualitative factors as well as quantitative factors. Second is evaluating management biasness. So when you are evaluating the management biasness, it can be on accounting estimate, which we discussed, like warranty, sales and incentive, or maybe leave encashment, employee benefit plans, or maybe like provision for expenses. So in that case of scenario also, you need to apply more additional care. Second is selection and application of accounting principles. So why you need to provide more professional skepticism on the selection and application of accounting principle. What is selection and application of accounting principle? Like for example, depreciation. So for depreciation, SLM and WDV both are allowed, right? So which one is more suitable for the management and what management has taken? So in that case of scenario, you need to provide, you need to keep additional professional skepticism in mind. For example, management has taken SLM, right? So you need to ask those questions, why SLM, why not WD, right? For example, inventory, management is using LIFO, not FIFO, even though both the alternative is being allowed as per GAAP, right? But you still need to be more conscious and asking more probing questions to the management, why they are applying LIFO, not FIFO. And you'll be understanding the justification of the management and giving rationales to those management interpretation. Next is adjusting journal entry, which we have discussed. Incentive and pressure on the management to manipulate financial statements. It's more inclined toward like fraud risk. In the next silo, we'll be discussing that. And third one is evaluating sufficient information essential for fair representation of financial statement. So when you are evaluating the overall financial statement, so how do you evaluate the overall financial statement presentation and disclosure? So as an auditor, we go through the checklist, like accounting standard checklist. Have you heard about accounting standard checklist or reporting framework checklist?
Yes, sir.
What is that?
Sir, I think like I used to do it for EMEA clients, wherein we used to have some gap checklist, wherein you need to make sure that whatever is given in that checklist is complied with, and you kind of agree, disagree, or like not applicable. You mark all of that in that checklist to make sure that you've completed everything according to that checklist.
Yes, absolutely true. So like whether you are doing audit in India, US, or any other part of the world, so every like generally like CPA firm, they have a conclusion checklist. So in conclusion checklist, they take care of whether they review whether the company has followed the respective gap or not. And every gap has certain requirements of the disclosure. So that disclosure checklist is being summary of all respective accounting standard for which disclosure is required. So we'll be checking the box and ensuring whether the financial statement are giving those respective disclosure required by the respective accounting standard or not, right? So by that way, you are evaluating the sufficiency of the information essential for the fair presentation of financial statement, right? And that also you need to apply additional or over professional skepticism, right? So far we have covered audit procedure and the audit area. They both are interrelated, right? So in audit area also you will be performing audit procedure. Now coming to the next one, which is fraud consideration. Have you heard about fraud consideration in audit?
Yes, sir.
So what is that fraud consideration?
Sir, we have to assess the risk on a fraud triangle, which is actually presented on the screen as well, which primarily talks about three things: that if there is pressure, there is rationality, and then there is opportunity, which primarily means the fraud can happen when these three parameters are present in a situation. That there is opportunity, there is intent, and there is pressure. So if these three things are there, then there are chances of fraud. Is what I could remember.
Yeah. So do you guys remember in our very first class when we discuss on definition, there also we discuss about fraud. Do you guys remember that?
the definition of fraud. We
Uh-huh.
did, even we did my MCQ also.
Yeah. So do you mind sharing? What would you still remember? What is the definition of fraud?
But as our one of our friend Kush said, it's based upon the like intention or any opportunity or any situation. It can lead to material misstatement, which can be called as fraud in an financial statement. I agree with Kush. He said maximum correct.
Okay, cool. So let's quickly understand like fraud triangle. So this is sometimes we call fraud trap as well. Yeah. So fraud triangle is basically a situation in which you have like management have pressure. For example, CEO, CFO, sales head, they have pressure to boost their sales. Then only they will get certain benefits. Then only they will get certain ESOP. Then only their bonus will be paid, right? So they are under pressure of meeting certain targets. And opportunity is like opportunity to conduct the fraud, opportunity to do the theft, opportunity to do the misconduct in any situation. For example, you have cash in your locker room, but you do not generally lock it, right? So you are giving an opportunity to other employees to do the embezzlement of theft or theft of your cash, right? For example, in any plant, so there are like a lot of computer labs, there are a lot of small equipments, there are inventory over there are small machineries also over there. Let's say just imagine a plant in which you have like inventory lying on right, left, center, everywhere, and there are some small equipments, or you can say tools also being lying over right, left, and center. And there's no security guard, there's no cameras, there is no you can say vigilance. So that means you are giving an opportunity to the employee to do the theft. So they steal your inventory. They may steal like some tools and equipments which they can easily bring into keep into their pockets or in their clothes or in their bags, right? So we are giving them opportunity. So when opportunity is being available to do the steal, to do the theft, then also the risk of fraud is high, right? Next is rationalization. So rationalization means like where management have certain reasons to do the misconduct. That means when company do not follow code of conduct, when the company do not you can say enforce code of ethics. So people do not know what is ethically right, what is ethically wrong, and they are doing a misconduct. In that kind of scenario, in that kind of company, there is a risk of fraud is high, right? So wherever any such situation arises where we have pressure on the management to commit fraud, right, then also fraud risk is high. When there is an opportunity, that means there is no appropriate safeguard to protect the assets of the company, then also fraud risk is high, right? When there is a rationalization, that means like management do not follow code of conduct, code of ethics, or the principles, right? Then in that case of scenario also the risk of fraud is high, right? That is called fraud triangle. So when you are doing the audit,
sorry.
Yeah. Yes, Kush.
No, if you want to complete first, then I can ask. It's okay. I'm sorry.
Go ahead and ask.
Okay, I just had a question. So when we talk about these 3 pointers in a fraud triangle, do all the 3 needs to be present in order to be fraud risk to be there, or only one of them?
Any one of them.
Okay, any one of them.
Right. That's a very good question, Kushal. Next, in this, like any of the, like when you are conducting the audit and when you are planning the audit, in any of the scenario, when you are understanding the business, when you are understanding the industry, when you are understanding your client, and you come to know there might be a pressure on the management, right, to inflate the sales, then in sales you can consider as a risk of fraud, right? And when you do, like, let's say inventory count, when you observe like inventory is lying over the floor, right, left, center, and there's no securities, that means there's an opportunity for employees to or the contractual employees to do the theft, right? So then, like, you it should trigger in your mind there might be a risk of fraud, there might be a risk of theft, right? So in that case of scenario, you need to perform like additional audit procedure. You need to plan the you need to assess the risk, and to respond to those risks, you need to plan and perform additional audit procedure. So if you look at the first point, applicant of professional skepticism in response to the assessed fraud risk. So apply the professional skepticism. So this is not applicant, this is application. Sorry, my bad. So application of professional skepticism in response to the assessed fraud risk. So wherever you have assessed the risk of fraud, you need to apply more professional skepticism in response to those assessed fraud risks. And accordingly, you will be modifying your planned audit procedure, and you'll be conducting additional audit procedure and obtaining sufficient and appropriate audit evidence to mitigate those risks or to conclude on those fraud risks. So there might be a possibility that fraud risk you have identified and you have actually find the fraud, right? In that case of scenario, you'll be modifying the opinion, right? So there might be a possibility you have identified the risk of fraud, but there's no actual fraud. Right? In that case of scenario, no modification is required in the audit report. Make sense?
Yes, sir.
Next one is impediments. That means obstructions to apply the professional standard. So professional skepticism. Right? Professional skepticism. So these all kind of small changes I have made in those notes, right?
Sir,
yes.
sorry. I think on that previous question that I was asking, right? So the risk is going to be there, but the fraud will happen only when all the three criteria are met, right? Like, for example, if somebody has to commit a fraud, then they're like, even if the intent is there, but opportunity is not there, they won't be able to do it. Right? So the fraud will happen only when all the three are met, but the risk is there even if one is existing.
Yes, absolutely.
Okay.
Absolutely.
That's where I was getting confused. Okay, thank you.
Yeah, no, thanks, Coach, for clarification. This is very helpful. Yeah, just like what Coach says is absolutely right. So risk is there, because like here we are discussing like at the risk assessment stage. So whether there is a pressure from the management side, there's an opportunity, or there's a rationality. So risk is there, but actual fraud will be there when all these three parameters are met, right? Next is impediments, that is obstruction to apply the professional skepticism. So there might be some situation, there might be some client personnel, there might be some of your senior would not allow you to apply the professional skepticism. So you may get certain challenges, certain questions from the client side also. And sometimes, like, to maintain the relationship or to ensure your continuous compensation, right, then also you will compromise sometime with the professional skepticism. Those all are called an obstruction to apply the professional skepticism. First one, if you see, like inherent pressure from the client relation. That means if you ask the right thing in a right manner, then client probably may get upset, and next year they will change the CPA firm and you will lose the business. To maintain the client relation, sometime you are under pressure, not apply the professional skepticism, right? But ideally, you should not get into any such pressure. Second is cost. So if you apply professional skepticism, it may require you to perform additional audit procedure in any area. right? So that may increase your cost of the engagement, and for which you are not comfortable, because for example your engagement is almost at very low margin, or maybe you are already incurring a loss on the engagement, right? In that case of scenario also, you will ask your team member not to perform too much additional audit procedure. Third is avoid conflict with the management. So management is very dominating and you wanted to avoid the conflict, right? In that case of scenario also, you will not be comfortable in applying the professional skepticism and asking for small and different evidence which you required, which ideally you are required. But you should not come under any of such inherent pressure, whether it's of client relation, whether it's of like avoiding any conflict situation, or whether it's a cost constraint, right? Second is inappropriate level of trust or confidence in the management judgment. So when you are not confident about like what management is making the judgment for the respective areas of accounting, in that case of scenario, sometimes you do over professional skepticism and you end up doing inefficient audit. So you need to avoid that situation also. Third is auditor personal biasness. So like we discussed earlier also, the biasness may be on account of political, religious ideology, right? Or maybe from your historical experience. So if you have seen in the past, like the let's say account person or maybe the finance person of the client, they never do any mistake. So sometimes you presume that they will not be doing a mistake and you will not apply the professional skepticism. Or maybe sometime you, most of the time you have seen that employee of the client, they do mistakes. They do all the silly mistake and all the time you're doing like end up doing over auditing. So it is not good either ways, right? You should be assertive in application of professional skepticism in all the different situations. Last one is lack of auditor training, experience and expertise. For example, you have involved a first-year staff in conducting the audit of the complex accounting method, let's say acquisition or merger. So your staff may not have that much experience, that much knowledge and that much expertise to deal with that complex accounting method. Then how he or she would apply the professional skepticism when he or she do not have much knowledge, experience and expertise of dealing with such situation, right? So it's being a responsibility of the engagement partner to apply the experienced staff in the complex accounting matter so that they should have an understanding how to deal with those kind of complex accounting matter, right? Make sense? These all are abstracts or impediment, I don't know like how to pronounce it, impediments to apply the professional skepticism. Make
These
sense?
all things we will have to mug it up or
not to mug it up, but you should be aware of, because when you like after this, when you see certain questions, you get to know like how it is being tested in the exam. You are not required to mug up things, especially in CPA exam, but you should be aware of things. That is more important. Because you're not required to write all these things, right?
Only
so
understanding the concept is more important.
Only the understanding of the concept is more important here. Next is engagement partner responsibility. Who is engagement partner? Are you guys with me?
Yeah, who is responsible for signing that particular engagement, after the audit is done or the engagement is done?
Yeah, absolutely true. So engagement partner has certain responsibility. First is setting up the tone at the top. That means like how do engagement partners set the tone at the top? Maybe in the planning meeting with the team, they will specifically, it's a mandatory requirement for the engagement partner to communicate the fraud risk, or you can say significant risk, and ask each team member to apply professional skepticism throughout the audit, right? It is being the responsibility of the engagement partner to communicate to all the team members to apply professional skepticism throughout the audit. Second is challenge the management representation. So like in many examples we have discussed, like management may ask the provision is required $100,000, whereas you feel it is 200,000 is required, right? So wherever management has taken any estimation, right, management has taken any judgment, so as an auditor we need to challenge those judgments, challenge those management stand which they have taken, right? Third is involved in all the phases of audit. So partner involvement is required throughout the audit, not only in planning phase or just in the completion phase. In the execution phase also it is being required the regular intervention and involvement of the engagement partner, right? Fourth is communicate responsibility to each engagement team member to apply professional skepticism, like we discussed in the first point. So these all are engagement partner responsibility to apply the professional skepticism, right? The last one is improvement in quality control system. So what is quality control system? What is quality control system? Any idea? Gurmehar, Sandeep, Ayush, Vineet.
So how do we ensure the quality throughout the audit of the engagement? Something around that.
Yeah. So quality control standards are being the responsibility of the firm and the responsibility of the CPA to adhere that, right? So firm do have internal quality control standard, which like in compliance with independence rules, ethics rules, or the different standard of the AICPA, accounting standard, auditing standard, right? So peer reviews, appropriate documentation maintenance, right? Retention of the documentation. These all are quality control system and standard, which are called firms procedures and policies, internal procedures and policies, right? So what is the setting up the tone at the top is also being the responsibility of the engagement partner, and this is also comes under the quality control standard. So as per the firm policies and procedure, it is a mandatory requirement for the all engagement partner to set the tone at the top, that all the team members should be applying professional skepticism, right? They will be applying professional due care. They will be applying the professional judgment appropriately. So it is being primary responsibility of the engagement partner to communicate. That is also being part of the quality control standard of the firm, right? Second is enhance professional skepticism by implementing and maintaining appraisal, promotion, and compensation process. So like, for example, like who all are working in CPA firms, right? So in your organization, right, your compensation, your performance evaluation, or your increments are being aligned with the firm quality control standards, policies, and procedures, right? Like some of you like who are working in CPA firm, I'm sure every year you might need to sign up firm independence policy, right? You need to sign up like ethics policy, code of conduct policy, right? And certain amount of learnings. If you do not do those learnings, then it will impact your performance evaluation. It will impact your bonus, increments, and promotion, right? Yes or no? If you guys are
Yes, sir.
right?
Yes,
So
sir.
maybe any of you would like to share any example?
Sir, example of?
Like this, you can say requirement within your firm.
Yes, so I think so. There are two types of let's say independence, code of conduct, or ethics training and stuff that we need to complete. One is quarterly, the other one is annual. So we get those notifications wherein we need to make sure that we are complying with those, like we are making sure we are completing those trainings and signing the checklist in time. Otherwise, it's more of a quality and risk management compliance issue for us. So that's how we do it.
And that will impact your performance.
Your performance, exactly,
right?
exactly,
Both
because it's one of the KPIs.
Yes, it's one of the KPI. So from where this KPI is coming is actually coming from here, right? Your technical training and non-technical training.
But this is my personal view, but I feel overdoing of these things, like implementing all these things, other than the work the employee is carrying out, sometimes, drains him out and he's not performing up to the mark because of that pressure of doing the work, assignments, and then again handling all these completing these trainings. And that is even sometimes I've seen especially in Big Fours, it's impacting your bonus as well if you're not completing the trainings and all that.
Yeah, that's what it's mentioned here. It will impact your compensation. It will impact your promotion. Right. So this is being requirement to for the quality control standard of the firm. If they do not follow this quality control standard, they will get badly affected by the PCOB.
Okay.
Right. Then it will impact their overall business as well.
Okay.
Now hope you will be in a better position to understand why they are forcing us to conduct so many training. It's required for their business. Otherwise, if they will depart from PCOB, then all the listed clients will go out. And like, who will pay the compensation to you then?
Right. Yeah.
Next is assigning personnel with necessary competency in the engagement, establishing policy and procedure, and lastly, monitoring the quality control system. Right. So these all are comes under the professional skepticism.